My book is called How to Own the World, but what do I actually mean by that? Well, for starters, I'm not talking about ruling the world or about how much power you have. I'm talking about having power over your investments and, by extension, your future. So to do this, you should own a wide variety of investment products or assets. In the long run, you'll want to have cash, shares, bonds, commodities, and property, not just one or two of these as so many people do. And you should also aim to own assets like these from all over the world, not just from one geographical area such as the UK or the US. That is to say that overall you'll want to be geographically diversified and diversified by asset. So geographically diversified simply means that if one part of the world is having a difficult time, say Europe or the USA, you still have a good chance of making money because you have exposure to another part of the world that is going up a great deal. For example, certain emerging markets or Japan perhaps. Rather than trying to work out where the best place for your money will be next year, which is difficult and time consuming, it's easiest just to be invested in every major part of the world. And this means that you benefit from the consistent growth of the world economy as a whole. Diversified by asset class means that in a year when, for example, shares fall off a cliff, as most of them did in 2008, you won't lose a vast chunk of your money like everyone else. You'll actually have a good chance of having a positive year, or at least a far less negative one than most people, simply because even though some of your shares might have fallen in value, you will own other assets such as commercial property, bonds, gold, silver, oil, and certain other commodities. Many of these will have held up very well indeed in a bad year for shares, and the reason this happens is due to a phenomenon called negative correlation. It's often the case in investment that certain types of asset tend to go up when others go down, and that is to say that they are negatively correlated. This relationship in real life is never exact, but if you own a wide variety of types of asset rather than just, say, shares or just property, you have a much better chance of seeing your money continue to grow if there's a stock market or a property crash. You will also want to ensure that you invest a good percentage of your money each month so that you can benefit from real inflation. And the best way to do this is to own the monetary metals, gold and silver, and arguably a wide range of other commodities. This will mean that unlike almost everyone else, you will actually gain from inflation in the price of stuff, rather than suffering a decrease in your living standards. Famous US investor Harry Browne has said about owning this wide cross-section of investments that over broad periods of time, the winning investments add more value to your portfolio than the losing investments take away. Award-winning British investor Tim Price calls true diversification the only free lunch in investment. Jack Meyer, who used to run the Harvard University Endowment Fund, has said that the most powerful tool an investor has working for him or for her is diversification. True diversification allows you to build portfolios with higher returns for the same risk, and most investors are far less diversified than they should be. One way to diversify is to invest in ETFs or exchange-traded funds. ETFs offer investors the ability to invest at a very low cost in global markets and to diversify across potentially thousands of individual securities within just one product. With a few clicks of the mouse, an investor can buy equities, bonds, commodities, property, and a whole host of other asset classes to get the exposures they need or want. The great thing about ETFs is that they're fully transparent. You can see all of your holdings online, and there are no hidden costs. So whether you own £1,000 of exposure or $1 million, the total expense ratio that you face is the same. And this has made ETFs very popular amongst institutional investors, and is one reason why many experts recommend them as a core portfolio holding. ETFs are just one way to invest, and in my next video we will look at the different types of investments.